Hello and welcome to Nairametrics Executive Couch, where we delve into the minds of C-suite executive, policymakers and business owners who share their wealth of experience, perspective on key industry matters, providing you with key information and actionable insights. Today, your host is Uade Ahimie.
Thank you, Joanna, for the introduction. Today, I have the privilege of speaking with Mr. Modupe Kadri. He is the Chief Financial Officer of MTN Nigeria. He will be providing us insights into the recently released results for 2023 financial year. And just sit back, relax, and enjoy our Executive Couch brought to you by Nairametrics. Good morning, Mr. Kadri. Welcome to Nairametrics Executive Couch. My name is Uade, and I'll be interviewing you today. Maybe you just tell us a bit about you.
Okay, good morning. Nice to be here. I'm Modupe Kadri, the Chief Financial Officer of MTN Nigeria Communications PLC. Been here for 4 years now. Previously, I used to be in CFO in Ghana, MTN Ghana.
Thank you for giving us the honor to speak to you. Your financial statements just came out, and when we looked at it and everybody's talking about, the shareholder value erosion. With that and negative shareholders funds of 40 billion, how do you look at that, and what kind of strategies do you think you're going to put in place towards ensuring that at least you give the market confidence?
I think the starting point is that, so if you look at our financial statements, it's more of a story of two halves. The top half shows a strong operational performance despite the headwinds that we witnessed. You should know that 2023 was an unusual year. Apart from being an election year, we saw the free floating of the Naira post the President's inauguration speech. We also saw the removal of petroleum prices. And all these things have, and of course, we've seen the CPI going up through the roof. I recently saw the CPI also adjusted the MPR. Now that shows the headwinds that we're facing. So when you combine all these things, you look at the top line, you still see strong EBITDA growth, plus a 4.5 basis points erosion from last year, as against a devaluation of about 100% more or less, from 460 to 905. So back to your specific question, I think the bulk of that value erosion comes from the devaluation of the currency. Multinationals like ourselves have foreign-based liabilities, loans, trade lines, letters of credits that have met maturity but have not yet been fulfilled by the central bank. And approximately, actually, if you look at year on year, forex exposure just increased from about 700 million to 800 million. So that's not actually the problem. But the problem is where you devalue from 460 to 905 at the end of the year. Then that's what actually led to the exchange losses. And I must say, though the losses appear to be huge, but they're actually unrealized. So if the Naira recovers, that will be reversed. So 83% of that amount is actually unrealized, which means it's non-cash. So it means if the government gets the policies right, then we should be able to see a repair or a recovery from those reserves. That's one aspect of the equation. The other aspect is that if for any reason that doesn't recover, then there has to be opportunity for fair pricing, such that multinationals or those who are operating in the industry can actually recover their costs. So if you look at the FMCGs too, the Nestle's of this world, the PZs of this world, the Cadbury's of this world, the breweries too, Nigerian breweries, Guinness, all announced huge losses. So that's an indication that it's a macroeconomic problem which needs attention from the government. And once that is fixed, then we should see a recovery.
You mentioned currency devaluation, and we've seen that devaluation continually going on in 2024. Currently, the Naira on the official market is about 1.5. On the parallel market, it's about 1,600. What do you think how do you think this could impact your Q1 results, which will come out maybe at the end of this month?
Okay, so I'm not going to make forward-looking statements here. We'll stick to the FY23 results that we've announced. But having said that, I think it's also fair for your audience to understand the construct of our expenses. So easily 70 to 75% of our operating expenses comes from our tower contracts, our lease contracts. And a good portion of that is indexed or benchmarked to the US dollar. So once that fluctuates, then you have that knock-on impact through to operating expenses. But the good thing about those contracts is that you actually pay based on the rates applicable at the start of the quarter. So even the fact that even though in Q1, let's say Naira has run to 1,500 or 1,600, the tower contracts were actually paid at 905, which was at the start of the year. So between now and April, then that's anything can happen. And if you look at the interventions that the central bank has put in place, measures that are put in place to try at least you could say to a certain extent, they've at least arrested the slide, still on the heightened levels at the 1,500 levels. But previously it was going to 2,000, uncharted territory. So I think starting point that they need to stabilize that, and then once they start to recover that, then we can talk about what happens in Q1. So it's early days for me personally.
So when we look at that, let's look at the 2023 results. You said most of it is on realized losses. With that, we know MTN being on the market, dividends. Do we see dividends being paid against 2023, and what are the likely implications of dividends going forward?
Well, I think the starting point is that we have to respect the laws. So once you've eroded shareholders' funds, the first thing to do is to fix that, because you can't pay dividend out of capital. So that's the starting point. So to our shareholders, and we have a good track record of dividend. I mean, for the past year since going public, we've been paying at least interim and final dividends. So starting point is that we have a dividend policy. The policy is a function of your results for the year. If they're positive and the results are not impaired, then we would resume that. So I think the focus for us right now is to ensure that we fix the negative reserves, and then what happens in the future, time will tell.
740 billion forex losses. It's significant, but at the end of the day, as a business, you must be a going concern. So how are you looking at strategies to mitigate that going forward? And then government action in terms of trying to stabilize the Naira, because first of all, like you said earlier, let's stabilize the Naira to a point. So what strategies is MTN looking at towards doing that?
Right, I mean, I agree 740 billion is a big number in any currency. But you have to contextualize that vis-a-vis your top line revenue. So yeah, easily 2.4 trillion naira by revenue, easily 3 trillion naira company in a few months or few years time. So that just tells you, and like I said, operationally the company is strong and has been able to deliver excellent results given the circumstances we face. So what needs to be done specifically is that, in as much as, to remain a going concern, and I said this during an interview elsewhere during the week, that it's not much about MTN that I'm really bothered about. It's about the ecosystem and how the government needs to ensure that that ecosystem thrives. Now, we are a critical national infrastructure provider, and the nature of our investment is actually capital intensive, which means that to sustain what you have to keep investing. Now, if you don't have a business case for investments, then what's going to happen is that people would withhold or would not be able to invest. And when you don't invest, what happens to your infrastructure? It degrades and it goes down. And this is exactly what happened in the oil sector, where, for years they were not investing, and now we need those investments most, we can't get them. So starting point that we need to learn from that. Otherwise, the same lot will happen to us here. So I think to a large extent, policies have to be right, pricing has to be right. Now, Mr. President did announce that the Naira was floated, PMS was deregulated, and even the central bank has now said it's a willing buyer, willing seller. So I don't see in that construct why an industry should be regulated in a way that is antithetical to those set of rules, if you understand, because that's what is going to lead. So if you look at the FAC account and the amount of money that's being distributed, it's coming out from the policies that, okay, we're avoiding paying subsidies and, and transmitting this down. So that's how the government is able to survive. In our case, every other person in our value chain has passed on their costs without bar none. And yet I can't. So pass on my costs. And in the industry, so it cannot thrive that way. In effect, what you might be ending up doing is that you're getting, if you look at the FMCGs, what they do is that almost every week they announce price increases, and people take it as normal. Basically, it's a willing buyer, willing seller. You adjust. I know telecoms are essential services, but you have to look at it vis-a-vis the context or the backdrop of the investments that are required to do so. So I think to a large extent, engagement with the stakeholders to make them understand. Now, it's not about MTN alone, it's about also the smaller players in the market. If MTN is bleeding this much, you can then imagine what other people in the industry will be doing. And don't forget, the telecoms industry accounted for about 12 to 14% of GDP. So which means that growth, the 3% or 3.5 that is being reported, is also being driven by this industry. I don't think what you want to start doing now is to make the industry recede, because then actually contracting your economy. That's the way I would look at it.
So losses, taxes, we've seen the budget, we've seen the expenditure framework. This is an administration that is going to be heavy on taxes. Is MTN planning to pay taxes with these losses? And if so, how does that affect your financial planning? Because it will be huge either which way.
Well,
losses on one side, taxes on the other side.
I think that's one of the things we will probably have to engage. Even the industry as a whole will have to engage with the presidential. The FAS and actually the Presidential Committee on Tax Reforms. One of the strange things in tax is that, so if you have an unrealized loss, the taxman will not actually recognize it until it's realized. So he's going to add it back and tell you to pay tax. So he's not going to be shortchanged in that regard. But is that the right thing to do? I think that's a question for another day, which we have to explore. But having said that, over the years, MTN has always remained a tax compliant, one of the the top. Was listed as one of the top 20 tax compliant organizations. So we don't play with our taxes. We give government their due share as to. But I think the government should be more interested in how much industry is going to make to be profitable so that they can get their taxes. So in all this, like I said, despite the fact that our cost profile has gone up, it's not affecting the VAT to the government. It's additional cost to me. So, and during the year, for instance, the Finance Act 2023 introduced the VAT on leases, tower leases. It wasn't there before. Additional 7.5 cost, which I have to carry, and I can't pass on to the end customer. So, I think we need to have a constructive dialogue, because organizations like ours are actually efficient in helping the government collect taxes. But to do so, you need to be around. In other words, to be profitable to do that. And that's the discussion we need to have.
Let's look at, you talked about your tower assets and lease assets. So let's look at, in 2023, you moved part of your assets to ATC. You're in dialogue with IHC in terms of your original contracts and all. How does that span out for MTN? What are the changes that you're looking forward to, or if there are going to be any changes in terms of looking at the macroeconomic environment and the risk factors?
Okay, so the first matter you talk about, ATC, yes, indeed. So when we signed off our original asset infrastructure sharing agreement, as it were, in 2014, it was for 10 years. So, which means that after the end of the 10 years, that agreement comes to an end. So, you go back, sit down, renegotiate. And because in any environment, you had other tower providers who are providing similar services, our job is also to ensure that we're able to get a fair mix of I mean, a good rentals on those assets. So we went through a competitive process that portfolio of assets were due to be reviewed, came up with competitive pricing, came up with a structure that worked for us, ultimately to optimize the amount we are paying, and that's what led to that decision to move those portfolio of assets to ATC. Now, I must say that the matter is in court, so we need to be careful not to be sub judice. So beyond that, we leave it at that, but that's what informed the construct. So even in talking to IHS now, it's also about the fact that we need to come up with a sustainable model where both parties or all parties will thrive. And that's what those discussions are about.
Let's take a short break and then we'll come back to the interview.
Sure.
Thank you, Mr. Kadri, for talking to us.
Thank you.
Welcome back to Nairametrics Executive Couch. Thank you, Mr. Kadri, for speaking to Nairametrics. Let's continue with the interview.
Okay.
A lot of news out there, interconnectivity depths between Globalcom and MTN. What is interconnectivity? Let me put it that way, first and foremost. And does that affect your financial planning in one way or the other?
Okay, so let's put it this way. So what's interconnect? So interconnect is when I, as an MTN subscriber, calls another network, be it Airtel, Glo, or Nine Mobile. Now, there is a floor price that the regulator has fixed, which means that for every minute my customer, calls another network, we're obliged to pay that amount of money. And of course, the network in turn for calling, so when the subscriber is making that call, has already charged a tariff. So there's actually already a margin. So interconnect actually should, under no circumstance, lead to any debt at all, because the network has actually collected the money from the subscriber. There is a regulated amount that you're supposed to pay to the receiving network, and you keep the difference. So there's no way, there's no reason why there should be any interconnect debt in the first place. So in the particular matter under reference, I think the NCC has done a lot of that. EVC has intervened in the matter. All matters have been settled, but I think going forward, those are the issues that the NCC also has to ensure that the rules of the governing the interconnectivity agreements are always respected. And don't forget, actually, there is actually an interconnect agreement where A and B parties actually sign and say that, okay, for every minute terminated, they will pay X, Y, Z within that amount of framework. So I don't think it shouldn't have been an issue in the first place, but anyway, it's what it is.
There are rumors in the market. MTN wants to acquire one of its competitors. MTN has also come out to say that's not true. Are there any possibilities in the future of acquisition, whether in Nigeria or somewhere else?
No, look, I think rumors can be very dangerous. I'm not aware of such plans to acquire anybody, but what we've said is that it's important that the industry survives. And to a large extent, we're making our assets available for infrastructure sharing or things like that within the rules. And don't forget that even the NCC has roaming agreements where you can actually do national roaming, in which case, a local operator can roam on the other operator within a certain framework. So perhaps that's what was being referred to, but certainly no plans for such acquisition. And if there we're obliged, being a listed company, to actually make a public statement to that effect.
We know MTN is a member of SWOOT, or that stocks with worth over $1 trillion. Valuation close to $4 trillion. Is that justified in your own opinion? And how does the company plan to, leverage for expansion support to support this valuation in terms of its ROE?
Look, okay, so I'm sure if today you had a new entrant who wants to build a network with over 70 million subscribers, I'm sure they'll be spending more than 4 trillion naira. So that should give you an indication whether the company is appropriately valued or not. So, but that's the stock market for you. And I think we're going through a difficult economic period, but it's also a temporary glitch, I would say. Strong optimism that the Nigerian economy will recover. There's every reason why it should, and then you will be able to see. And I see a lot of people we're now having so many companies join the trillionaires club now. That what's the next thing to go after a trillion? You should be going to, is it zillion or what? I don't know.
Well, maybe you should be going in the direction of the tens of trillions.
Tens of trillions. Okay, fine. But anyway, it is what it is. I think, and that's actually an indication of the Nigerian exchange, where people are able to come and unlock their assets. So, if you look at our own case, we only have about less than 21 billion shares outstanding, and people forget that these are 21 billion shares of 2 kobo each. So, and if it's able to generate that amount of money, if you look at it just tells you that I think there's a lot of value to still be unlocked.
Earlier on when we were speaking, you spoke about interest rates going up. MPR 400 basis points, the last MPC. One of your models is to use leverage towards expansion. How does that, with the high interest today, how does that affect your plan in terms of your expansion drives?
Well, those in the capital markets last year said every time we came to the market, we dodged bullets. As you know, we actually have a bond program, and I think 49% of our debts now are fixed at max of 13%, 12.75 to 13%, 7 to 10 years. So that's provides a lot of stability. So when you actually look at our effective borrowing cost, it's way below inflation. So yes, interest rates going up will be a concern. So obviously, the whole issue is to try and fix the floating instruments. Of course, the commercial papers will flush out max 270 days, 180 days, whatever the tenors are, and that's. We'll continue to relook at it. But I think with our AAA rating, we've been able to get excellent rates, almost close to the sovereign. And that also shows the degree of confidence that investors have in our portfolio.
Import and maintenance, a huge challenge today. Critical equipment, difficulty, foreign exchange is one. Even just bringing it and clearing it. How does the currency depreciation, inflation rates, how is that affecting maintenance and infrastructure for MTN?
Well, regardless of whether we're MTN or anything, you still go back to the traditional adage of cutting your coat according to your size, or to your cloth or to your size. So, well, unusual times. From a governance perspective, our capex is fixed in Naira. So with the devaluation of the Naira, it does mean you're going to get less dollars to spend. So you just, and I think we've been here, this is not the first time we've been in difficult times, 2017 was one, COVID was another, now we're in this 2023, 24. We'll just have to adjust and prioritize, focus on what is important. And like I said, still have those engagements with the regulators to make sure that industry is able to price appropriately to be able to justify those continued investments. Because if that is not in the case, what's likely to happen is that you won't even have the firepower or the cash to actually make those investments. And that's where the problem may exist down the road. But for now, we still, and we have, over the years, we've always maintained. We took a 5G license when nobody expected us to take a 5G license. Last year, our population coverage on 5G increased from 3% to 11%. That investment alone is not worth of $120 million. Now, if I were to follow your own line of reasoning, then I would say, why should I really be making those investments? No, but you should make those investments because that's what is required to build the resilience or to carry the sort of traffic that we see on our network. So And of course, the reality is that with the newer technologies, the unit cost of data is much lower than the older technologies. So you really want to pivot to that, but then you'll be also worried about the fact that, hey, where am I going to get the FX from? And two, at 1,500, 1,600, can I still be carrying at these prices? So I think those dialogues or those discussions have to take place. And when they do take place, you will see that the industry will get back to its...
One thing you mentioned just before now was pricing. and it just comes next, pricing and inflation. You've tried to maintain your pricing, relatively across board. When do you think that these prices would go up? You've said that they probably don't need to when you look at the inflationary trends in Nigeria. And how does that help you maintain that financial health that you continually want to be?
I mean, it's economic 001. So if your revenue is growing below inflation, your business is contracting. So you don't need to be a rocket scientist to figure that out. If your revenue, like I say, is growing below inflation, then your expenses or your costs are growing way above inflation. So if you look at my results, my OPEX went up almost 50% or thereabouts, 40 to 50%. And your revenue is below inflation, and so I think those is more of having those dialogues. And yes, the government says they're doing a price study, but I'm sure the price study they did was well before the Naira was floated. So maybe you have to go and do another price study. But like I said elsewhere, that in the quest of waiting to get the right answers, going through this pain. It's only those who survive that will be alive to tell the story. And we need to shorten that pain period. And the industry is going through a lot. I mean, going to stand before the shareholders to explain how we got here, it's a big ask. But the reality is that we're not alone. And I don't think it's in the interest of the government to allow industry to survive, to be having these problems. And don't forget that, all these industries are still employing people, Now, you don't really want to create a knock-on effect on the economy. And that's why it has to be addressed. And there's an easier way of addressing it, and that is to make sure that it's also like the FMCGs are able to price appropriately. I think the telecoms and other regulated industries. And there's also the same dialogue you also have by the power sector, by the way, where even now they are saying that they have to look at that. Reality is that if you are not adjusting your prices to the levels that would meet your costs, then in fact you are subsidizing. So the question, who's paying for the subsidy?
Food for thought. So one other way, if you're not increasing your prices, the diversification of earnings. Currently, are you looking at that towards any more foreign exchange, expanding your businesses, MTN Nigeria, outside, providing those services based on the kind of assets that you're managing?
At the moment, not at the moment, but we just like you've seen that we've announced our Ambition 2025 strategy, which to a large extent depends on portfolio businesses. So our mobile services, for instance, is a portfolio of financial services, which we are actually actively pursuing. So that's part of our diversification. You've seen our Yoba product, which like WhatsApp Plus, in terms of content, things you could do on those platforms. And the first in Africa, by the way, that's a homegrown product, that's our Yoba product and things like that. So you've also seen what they're also doing in the Biobab, which is a fiber infrastructure business. Now we're trying to provide one unique hub for connectivity and stuff like that. So in terms of the strategy and what we're going to do is clear. We're clear as to what it is. But to a large extent, the economy or the economic conditions has to be right to support that.
Forex issues 2023, not just MTN, across board. We move towards market-determined exchange rate pricing. So when you look at that in terms of of your strategy to implement, what kind of hedging strategies are you putting in place, or do you plan to put in place towards managing and mitigating those financial risks that are completely inherent in today's economy?
Well, historically, we've used cash-backed based letters of credit. So basically, if you look at my balance sheet today, you see about 400 billion that is sitting there as restricted cash. So that's actually cash deposited against the letters of credit. Now, in an ideal world, it should have taken about just a few days. You open a letter of credit, the central bank provides the funds, they take the naira, and then everybody lives happily thereafter. Now, in a situation like this, the letters of credit have been opened. Central bank may not have the funds. I open a trade line with a commercial institution, a bank. They provide the dollar component, and then until the central bank is able to fulfill those obligations, I keep marking those things to the market. So that's historically what you've used. So, but where we are today, probably it has to be more of reduction in those exposures. Like I said, I still maintain that today Nigerians are still buying things that people say are expensive because there's a willing buyer and a willing seller. So what's going to be the incentive for those importers or those producers of whatever it is that the Nigerians are buying is that they know that if they get it in, they will get a buyer. So I think it's the same construct. In our own case, we probably have to reduce our foreign currency exposure, explore local alternatives. We're trying to empower the economic local ecosystem. And that also ties in line with what the Honorable Minister of Communication and Digital Economy is doing with the tech space. So we're also actively playing in that space and actively supporting those initiatives. Because if you have homegrown tech talent, then that can also replace most of those things that we pay for in terms of services from those outsiders. And that was also another way of that. And of course, where possible, we use non-deliverable forwards from the FMDQ within our economic framework to help with that.
MTN is heavy on community infrastructure projects. A good example is the Enugu Onisha Expressway. So from a tax efficiency perspective, and giving back to communities, how beneficial have these initiatives been? Or is it just MTN spending money and not getting back?
That's one question. It was a tough ask or a tough sell to the board and I keep telling people that when the government asked us to participate in the RITC, strictly speaking, there's nothing in it for MTN. Let's call a spade a spade. Now, most of the people who participate in the RITC, there's a benefit for them. So if, for instance, somebody is building a road that leads to a factory to haul goods, and the same road is also, people ply. Okay, I don't need a road to haul airtime, if that's the case, if you understand what I'm saying. But because it connects to our belief that everybody deserves a brighter life, that road is one key road that connects the east to the west. In fact, connects all parts of the country. It was something we just felt that we had to partake in, not because there's any direct benefits. Look, the tax subsidies may be there, but that cannot be the reason why you go and spend that amount of money on a road when you could also have, use that money to run your business. So I think it's the ability to give back to the community. We're enthused, we're happy about the reviews that we got in December when the road was partially open for the festive seasons. And everybody was, happy. That connects to our belief. So that connects to who we are. We're an organization that believes in making people's lives brighter, easier, and that was one way of giving back. And the other things we do to the communities that we serve, in terms of our MTN Foundation projects, touching lives in terms of scholarships, in terms of our healthcare programs and educational programs. So I think if you look at it from that perspective, that's the thinking of the board in terms of this. So if we do that right and it works, and I think so far, we're happy with the progress. The Honorable Minister has gone on the road. He's happy with the progress because we won't compromise any standards, just to make sure that we will deliver that road as if it were our own road, our own project. And for those who have been on the road, I'm sure that the sections that have been opened have seen a difference, and we hope to be able to see that to a logical conclusion.
I remember you mentioning earlier that cost of data based on improved infrastructure development has gone down, and this year we've seen revenues from data in MTN over 1 trillion, gradually, surpassing voice. The trajectory of the fintech community, which is driven a lot from technology or by technology and fintech services, achieving growth in similar perspective. We've also seen MTN play in that direction. So in the coming years, are we seeing more from MTN in that direction? What kind of things are you going to be doing, or what kind of things do you think you would do towards improving that space and ensuring that not only do people get data, but also revenues grow in that direction?
Well, I wish I could answer your question if you had the answers to the first poster I gave. Because, look, like I just said earlier, our 5G investments last year alone was upwards of $120 million. And that's investing in the data infrastructure. So, and with that, we're still at 11% population coverage. So, and of course, the 4G also went up from 79 to 81%. And these are huge investments that people make. The truth of the matter is that as technology improves, our devices become smarter. And what most people don't understand, people talk about, oh, my data is, going faster and all that. It's actually a function of your device. So when you use a smartphone, the smartphone is designed to be smart. That's why it's called a smartphone. It picks out the fastest network or best quality by default, unless you manually go and set it. So you may, if you, for example, if you default to a 3G technology and you watch a 1-hour movie, you probably consume less data than you watching the same movie on a 4G or 5G, and that's because of the quality and the speed. So, and that goes to the user experience. So people these days, we've stepped up. We're all doing Netflix, we're streaming DSTV, we're, all these are data-heavy things. Somebody said the other day, oh, MTN has shopped my data, like they always accuse of us. But I did occur to you that it takes, for a 1-hour movie on streaming, costs you about 6 gig. So, question is, what bundle did you subscribe to that you're complaining? So, so most people don't know, and if you think I'm joking, your audience can Google it and say how much does 1-hour movie? It's about 5 to 6 gig. So people don't know, but again, I'm telling you for free that is a function of whether it's high quality or ultra high quality or whatever, and the speeds of those things. So my point is that, yes, even though the cost per data on a newer technology might be lower, but when you interface that with the high cost of the dollar today and the cost required to make those investments at today's prices, becomes a problem to balance out.
Final words for our viewers and subscribers?
Yes, I think we do recognize that it's been a challenging time. Like for instance, last week we had some issues in Abuja that led to some network downtime, and we saw the backlash on social media. But one of the things we need to understand that most of these things are not actually from the network. In that particular case was due to road construction, where we had multiple fiber cuts. So to that extent, of course, we tried assiduously to reduce the downtime, and despite having about 3 or 4 levels of redundancy. But so, what's my final words? I think we remain committed to always providing the best service to our subscribers, given the circumstances that we face. It's a difficult balancing game, but we remain committed to that. We remain committed to Nigeria as a country. Of course, you did see proud supporters of the Super Eagles in the last Cup of Nations. And there are other things that we're also doing to also make sure that we remain a family-rooted Nigerian company. We may have our origins in South Africa, but we're proudly Nigerian company, and our subscribers can be assured that at all times we always have their interest, and we'll be making those investments also. Like again, you saw clearly, where everybody will run away from 5G, we provide 5G to our subscribers, same thing for 4G, 3G, and all other technologies. So we continue to remain proud of that commitment towards brightening the lives of our subscribers, with the firm belief that everybody deserves the benefits of a modern, connected life.